Hey traders, Raghi here, and we're taking a look at the pound Aussie tonight. This is one of three pairs that I'm watching for the RBA event that's coming up tonight, 10:30, RBA cash rate and the RBA rate statement. Notice here the expectations are for a quarter-point cut. That might be a little generous. I think there are a lot of traders out there that are thinking we will not get a cut in March and that the RBA might hold off until May. And I say a lot of traders because we're not seeing a tremendous amount of Australian dollar weakness going into this event. I do not think the 2% is baked into the cake as much as people think. There's been a lot of confusion about what the RBA has said about wanting a lower exchange rate, but at the same time being concerned about pockets of a housing bubble throughout Australia. So I hardly think this is a sure thing. And I don't believe it's necessarily baked into the cake as much as we think. Now, the other part of it is if we do get the 2% cut, I think it could really sell the Australian dollar off because it'll probably make traders think that we're going to end up by the time the May meeting is complete with a 1.75% rate. And that could really send the Australian dollar lower. Not just on the cut here, but it opens up another 25 basis point cut for that May meeting. Okay, so I do think there's this expectation for a 1.75 rate after the May meeting. So a lot of that's going to come into focus pretty much immediately after 10:30 tonight. Now, the thing I want to talk to you about here today is my two scenario approach. You should always have two scenarios. There's the one side that says, all right, well, for example, I'm already long the pound Aussie. In fact, in the chat room, we set up this trade on February the 23rd. This trade triggered on February the 25th, and we ended up with a 96.25 buy. That 96.25 buy followed through higher to our first profit target at 97.30. So what's nice about that is, two things. I usually have a 4-lot position, or I might go with an 8-lot position. But what ends up happening with the 4-lot is when we hit the first profit target, when we hit PT1, which is what 97.30 was, at that point I've got a plus 105 per lot. Okay, so that's typically times 2. So it's a 210 pip winner. Here's the important part. I ratchet my stop to just below my entry. In this case, my break even level, where I protect my capital, was at 96.15. So my break even there is at the 15 pip. Okay? I don't know what kind of E that was. I usually don't even put lines on my E's. There we go, break even. So now this puts the potential for profit target number 2 into focus. Profit target number 2 is at 98.45. So that is, now I've only got 2 lots. At the second profit target, I can choose to take the rest of my position off the table. So taking 96.25 to 98.45 would be a 220 pip winner. If I do it with the 2 lots I have left, that obviously would be a 240 pip winner. I'm sorry, what am I talking about? This would be 96.25 to 98.45 would be 220, and 220 would be 440 pips. If I take both lots out, if I only take the 1 lot out, then it's 220. Okay, I did just the 1 lot. So I took 210 off the table. Add to that, and this is getting pretty ugly. I'm having my John Madden football moment here. So 210, then I take another 220 here. So that's a total of 430, and I still have 1 lot left. So I'm down 1 more lot. So I have 1 lot left, and I want to see how high is high. What does that mean? Well, if the RBA cuts rates, I think we're going to see a significant sell-off in the Australian dollar. I think we'll easily smash higher through 98.45, and I can see how much higher we can go. I mean, does that put the 2.0 level in focus? It sure could. And with 1 lot, it's on a huge position. I'm not risking a lot. I'm not risking a lot of pips. I'm actually operating with a trailing stop at 96.45, so at very worst, I'm risking 20 pips. I do realize that if they do not cut, we could gap down on Australian dollar strength. But again, I've got a heck of a cushion. I don't see a scenario, even with a no cut, that all 430 pips of my thus far realized profits are going to evaporate. They may ding into them, but my capital is safe. And that's really what I want to talk about in scenario 1, which is if the market just takes off. I've got the one lot. Now, the flip side, and this is kind of the side I'm rooting for, and this is where my spreadsheet in the members area is now loaded up with a number of setups in the Australian dollar, New Zealand dollar, Australian dollar, US dollar, and the pound Australian dollar, which is, what if we don't get a cut? What if we get a bunch of Australian dollar strength? Where, at what levels on those pairs can I sell Australian dollar strength? And those are the 3 pairs that I'm watching. I'll give you the example here on the pound Aussie. If I want to take advantage of a no cut, so the Australian dollar is definitely going to strengthen, I can look at 97.20. That would be a good level to watch as long as I have a plus or minus. In other words, I have that price movement range I can play with of 60 to 70 pips. Remember, we could see easily 60 to 70 pips in terms of movement up or down. What I would like to see is that 60 or 70 pips is more exhaustive, that we're seeing a more what I call a catch the wick opportunity, a more exhaustive move that takes us down to 97.20, where traders start to bid the pound Aussie, and I get support, and this would be the next leg of a possible smaller trend following swing buy. So that's tonight's video. That's what I'm keeping an eye on for this economic release. Always keep 2 scenarios in mind. What happens if you just get follow through, or what happens if you get a correction? And especially within the context of a trend, the correction would be the opportunity. So always have an opportunistic scenario in your back pocket that you can put to work even when the follow through for your current position isn't there. There might be a way to build a new position and have even more lots for the eventual follow through, especially since we're dealing with an overall trend.